Welcome back. With Indian Open, the Asian markets, as we said at the start of the show, are relatively muted. You would have Hang Seng being active, but the rest of the Asian screen is very, very flat. And the SGX Nifty, of course, indicates a start which is flattish in trades, about 6 short points. Keep in mind, I think the last 2 or 3 days we've been saying that it largely remains stock specific because the index has had a bout of up move. Now it'll wait for the results to come in and try and take cues if indeed some of the heavyweights can throw in some better numbers and then try and make a move upwards. Though never say never when it comes to the Indian markets. Let's wait and watch what happens. But it's an important day. It's the expiry day. Navneet Saluja is waiting by to tell us how it is the setup on the expiry day. Morning, Navneet. Can we expect volatility?
Yes, definitely, and that's what Indian markets have been so far, at least in the last 2 to 3 months. But talking about the expiry day, remember, index has been gaining for the past 4 trading sessions, and in last 4 sessions, we've seen higher highs and higher lows, which technically is viewed as a positive sign. So yesterday, it was more about unwinding, at least on the index futures side. For Nifty futures, they were shedding off about 4.5 lakh shares. The open interest was down about nearly 3%. For Bank Nifty as well, there was unwinding of about 70,000 shares seen towards the end, and the premium was about 65 points towards the closing. But one good sign in the last 2 sessions has been with the markets going up, we've also seen the India volatility index cooling off. So that's a comforting sign for the bulls. Yesterday, India VIX closed around the levels of about 16.3. We've been talking about the expiry. So what sort of levels you can watch out today for Nifty? In terms of maximum open interest for today's expiry, it is at 11,500 call and the 11,400 put. Remember, yesterday also there was huge resistance seen around the 11,500 mark. So the range probably that you can watch out today will be between 11,400 on the downside to about 11,500 on the upside. And for Bank Nifty, you can watch out for 200-day moving average, which is somewhere about 28,800 on the upside. In terms of stock futures, there were a lot of stocks in focus. Yesterday, we did see movement coming around in a couple of stocks. In fact, ahead of the numbers, Mindtree was up and about. Fresh long positions were seen. We'll see how the stock reacts to the numbers today. Bajaj Finance is now trading just 2% away from its all-time high levels. The numbers come out next week, so watch out for that. Long positions were seen in this counter yesterday, and Indiabulls Housing Finance fell in yesterday's session. There was fresh shorting seen, and you also had Wipro, which reacted positively to its earnings. But on the futures side, we did see short covering coming about. Just quickly looking at the FI data and the cash side, they bought around 2,700 crore in last 4 trading session. But yesterday, it was unwinding seen on the futures and options side, unwinding seen for index futures, though they are still net short to the tune of about 59%. And even on the index option side, I think barring put short, which is some bit of long positions coming in, across the board, there was unwinding seen. With that, it's back to you, Neeraj.
Thanks a lot for that, Navneet. Well, we'll watch out for some of these names which have been active on the FNO side. But first, let's talk fundamentals. Parthiv Shah, director at TRACOM Stockbrokers, joins us right now on the show. Parthiv, as always, great having you. Thanks much for joining in. Parthiv, what's your sense? It's every day it's a set of individual pockets which are really moving ahead. At 11,500, are you a net buyer in the markets, or are you waiting and watching for the result season to shape up?
Good morning, Neeraj. See, Neeraj, again, the typical problem that our markets and stock pickers face is very select pockets in our economy are moving in terms of showing earnings growth, in terms of quality management, in terms of their fundraising ability, in terms of mitigating whatever problems there are with the slowdown of economy and rather garnering more market share. So at the best, what I can put and say is that that's only a 5 to 10% kind of entire universe of stocks which are like doing really well, and they're getting what I would call a scarcity premium. So say if I have to give some names, likes of Asian Paints, look at the valuation it gets, likes of HUL, and I think deservingly so. One might argue that they are very, very expensive pockets, but the problem is a lot of other pockets, a lot of other sectors are not growing. So whatever liquidity does come to these names. And even at a 5% volume growth, these are still considered to be very, very resilient at a point in time where the economy is slowing down. So I think irrespective whether it's 11,500, 11,000, 10,800, I think the right portfolio construct is extremely important. One will still have to diversify in terms of name. One can't just have consumption as a pocket, as an investment theme. One will have to diversify. But the idea is, and what we are pitching to our clients is that have market leaders. I think generally a portfolio construct which is predominantly having of market leaders, whether it is say in spirits, United Spirits, in cigarettes it's ITC. I think in passenger vehicle it's Maruti. I think it's very, very important to have market leaders because these are the resilient guys who will bounce back extremely strong when the economy is back. So I think instead of looking at the markets, it's more important to look at companies which are very resilient and which will certainly garner more market share and come back very strong when the economy is strong. So that's where I think we are more keen to invest into.
Okay, so one large and one small pocket, both of which we just did on First Word, Parthiv. Starting off with insurance, a big, robust day in trade yesterday. Almost everything went up. But I don't want to talk about life insurance. We've discussed them enough. Let's talk about general insurance companies. Yesterday, GIC-RE and New India Insurance went up almost 15-20%. 20% to be precise for GIC-RE at least. ICICI Lombard had a bit of an issue because Fairfax sold off its holdings in a bulk and therefore that was down 4.5%. What do you do with these three names? Or any of these three names?
You're absolutely right, Neeraj. We have discussed a lot about life insurance. They have done well as an investment bet and still will do well. But talking about the general insurance play, I certainly have a lot of reservations in the public sector names. We see from their peak or from their IPO levels, they've tarnished investors' value. And now from the lower base, I think they're rallying 15-20%. Still, we are not very comfortable. A key ratio monitorable, which is the combined ratio in these names, still is not at a comfortable level for me to give a case of investment in these PSU names. So unfortunately, I think again there's a scarcity in terms of the options that investors have, and which is ICICI Lombard. No doubt, I'm sure a lot of investors would be desperately waiting for a name like HDFC Ergo, but as per the management's guidance, I think that's still 2 years away. And HDFC as a group believes in developing scale and then bringing out a company for an IPO. So that's still a long time away. But till then, I think I still believe, despite the fact that Fairfax has sold a lot of its holding, ICICI Lombard is still a very credible name. No doubt the data points do indicate some slowdown, and we have to understand the fact that general insurance business at times does have its cyclicality. But again, I think I'm very impressed with the fact how well they've maintained their ROEs, and more importantly, they're constantly working on bringing that combined ratio below 100%, and they have executed well in some of the quarters where the combined ratio has been below 100%. So I think it's a far more credible name. They're far more aggressive than a lot of the public sector peers, and the story of the market share being transitioning from public sector to private sector will happen a lot faster, according to us, in general insurance space as compared to even life insurance space. So I think ICICI Lombard, if it were to correct by say 5 to 10%, because currently the valuations are slightly on the higher side, then certainly I think it will become a very credible name to invest into for long term.
Okay. Well, do watch out for this one. As I said, a technical trigger which led to a price correction yesterday. Does it bounce back today? I have no idea, but I'm just thinking out loud that if everything else did well, maybe ICICI Lombard might have a decent outing in the session today, so do watch out. Parthiv, we just did a story on our website as well, and urge viewers to, of course, read that too, about infrastructure companies and a couple of names which have actually outperformed the rest. And it's very, I mean, you don't normally hear about them. You think that it could be NCC, it could be KNR, etc. But it's PSP projects and JMC projects which have actually done really well. And I think a common thread between the two was a very low or a minuscule share of NHAI orders. And therefore, their working capital cycle is robust. Their order book or book-to-bill ratio has moved up. Fundamentally, do you track either of these two names? Do you have a constructive view on either of them?
Yes, Neeraj, certainly. I think PSP projects as a stock we have recommended many times on your show, and we have even suggested to our clients last year at levels of 340, 360. And we were very clear. I think a couple of times we got a chance to meet and interact with the management. We even attended the AGM. And what we realized is that here is an infrastructure company where I think the promoter is not hungry to take in more orders. The promoter is more hungry for better execution, for picking up orders where he's very comfortable getting mobilization advance. He's very comfortable with his security of his payments stage-wise as and when his projects are executed. He did get a very prestigious order from Surat Diamond Brochure, which was like a 2,500 crore project. He's been picking up very smart orders, which gives him very good execution flexibility and very good payment cycle. No doubt in the stressful time, even for likes of PSP, the working capital and net working capital capital cycle has slightly been more stretched, but still it's lot more comfortable as compared to many of the other peers in this segment. And there's a key reason why this stock has done relatively well and still is quoting at on the higher side of valuations. And I think looking at the fact that now that they've executed such large quantum of projects, I think they are extremely well placed. And the best thing is that they tend to get a lot of repeat orders from very credible names like Intas, Torrent, Kedela, and also a lot of dairies are giving them a lot of orders now outside of Gujarat. So one had a fear that it's a too much Gujarat-centric company, but now they are moving even to other states, but moving very cautiously. And in infrastructure, companies which trend very cautiously and don't try to show very big growth but slow and steady growth are the ones which create long-term value. So again, PSP projects is certainly something that we like for long term, and we certainly like it for the next 2 to 3 years.
Okay, Parthiv, stay on. So many other stocks in focus today. So let's go across to a research team to try and talk about some of these. Remember, some result reactions could be anticipated, Mindtree in particular, and some IT companies to come out with numbers later on. And of course, some other stocks in news as well. So Sameet, Agam, as well as Nikki join in to talk about them. Let's start off with Mindtree first.
Well, it was a mixed quarter, and one may argue that we've seen a fantastic operational performance, but I'm going to take you through the reasons behind that. Firstly, when it comes to revenues in dollar terms, uptick of around 2.7%. Revenues in rupee terms, an uptick of around 4.4%, and largely in line with street expectations. Its operating margin standing at around 13% against 10%, and net profit rising 45%. Why is this? Because the company took a one-off payment in order to pay employees, and this was, of course, a very large bonus that they gave to the employees because of the 20-year completion of the company. But if you leave that aside, there's been broad-based growth across verticals, but there's also a decline in revenue productivity. Of course, this to a certain has to do with the change in the top management. Of course, we do know that the entire first tier has moved out and it's been replaced. That said, in terms of retail and CPG, that remains lackluster. High tech, of course, along with travel and hospitality, continue to do well, but there is still, as far as the expectations of the quarter is concerned, that's it's coming as a mix. So we're going to have to wait and watch as to how Mindtree opens up. Analysts were also mixed in their reading of the earnings.
And a bunch of mid-cap IT numbers slated to come out today, Agam. So it'll be an interesting day for mid-cap IT.
Yeah, absolutely. We have Cyient and we also have Mastech, yes, which will announce earnings.
So it'll be interesting to see what happens there.
Yeah,
Great. Packed day for Agam. The last few days have been like that. But thanks for that, Agam. The other key stocks in news, Sameet.
Let's start off with the Hathway earnings that came in. Now, the revenues of the company were high by 13%, led by the cable business. The EBITDA jumped nearly 2 times, but this would be mainly on the back of the Ind AS implementation that the company has done, and it was not there in the last year. So that's the reason we are seeing this kind of bump up when it comes to EBITDA. The net margins also expanded to 23.2%. However, the company's net loss, now that contracted to 2.6 crore rupees. Now, this would be on the back of higher other income in this quarter and because of a forex loss that the company had last year. On the other side, if you see the cable and the broadband business both reported a strong revenue growth. PNB Housing Finance would also remain in focus because they have come out with their quarterly update and they're saying that the disbursements were down nearly 35% compared to last quarter and 41% down compared to last year. The company's securitized loan amounting stood at close to 3,600 crore rupees. The asset quality was stable at around 0.84%. That was the GNPA number, while the liquidity at the company stood at close to 4,300 crore rupees. That is only 6% of its borrowings. NALCO would also remain in focus because the company said in a release that they are facing acute coal shortage which has affected the company's smelter operation, and the company fully depends on coal that comes in from Mahanadi Coalfields, that is a subsidiary of Coal India, and because of this shortage in coal supply, the current coal stock has been completely exhausted, and the company has appealed not only to Coal India but also to the Ministry of Coal to ensure increased coal supply. CG Power would also remain in focus because the forensic audit has commenced from October 15. That's what the company said. BSE has appointed MSA Probe Consulting for conducting this forensic audit starting from financial year 2016 onwards to till September 18th. Lastly, ICICI Lombard on the back of the bull deal that happened yesterday where Fairfax sold its remaining 4.9% stake in the company.
Okay, well, a bunch of stocks. We'll watch out for some of those. Nikki, also focus on aluminum companies.
Yeah, Hindalco and Nalco. Nalco again makes it in the news. It's been a problematic company since a couple of days. We've seen a lot of things not going well. But in today's trade, it's clearly the Alcoa numbers. Although the numbers look fine, top line, we're looking at a $2.6 billion, pretty much in line with estimates. EBITDA, $374 million, which is a downtick sequentially 15% based on the kind of the lower realizations that are coming in from alumina. But then what is really disturbing is the kind of demand forecast that they've given. Alcoa has projected a degrowth in aluminium demand for 2019, and they expect that to be in the range of 0.6 to 0.4%. Now remember, these are the degrowth figures versus the estimates of growth figures of 1.25 to 2.25 that the company had forecasted earlier. In terms of surplus, now they expect surplus of alumina also to be higher in the market. They estimate that to be in the range of 1 million ton to 1.8 as compared to 5,000 metric ton to 1.3 metric ton that we saw earlier. This is essentially driven by the faster restarts and expansions that are taking place ex-China. Importantly, third point, they've mentioned about capacities, placing the capacity now under review. They're going to review whether they need that kind of capacities. 1.5 million metric tons of smelting capacity, along with that 4 million metric ton of copper of the overall capacity has been placed under review. So essentially, it's not the numbers, but the guidance, which is expected to weigh down on the aluminium companies today.
Well, thanks all of you for joining and giving us those perspectives. Parthiv, I'll start off with the last one that we discussed and then move on to the others. The aluminum companies, Nalco has appealed to Mahanadi Coalfields, Coal India for increased supply, saying that the smelter operations are affected, which means in effect that fundamentally things are not probably in the best of shapes, and Alco are cutting the aluminum forecast as well. Do you think there could be stock price damage to either of the two names?
Unfortunately, Neeraj, it's very sorry state of affairs, and I would say rather shameful that a country like India, where I think we are the world's almost third largest player in terms of coal reserves, and a company like Coal India is unable to satiate the demand that these companies have, and there's a shortfall of almost 7,000, 8,000 tons, so I think per day, which is I think a huge shortfall. And we know for the fact that Nalco being a relatively strong balance sheeted company, I think the government is certainly going to milk it in terms of squeezing higher dividend, and that's why the dividend yield is also looking very good. So the year is a company where I think future the cash flows are going to slow down because of the coal shortage and lack of production, and also the demand metrics are not the best at this point in time, and yet the government is going to make sure that they have their share of dividends. So I think that certainly does not bode well for an investment case in a stock like Nalco at this juncture.
Okay. The other one is Mindtree. Parthiv, did the numbers make you believe that there could be any make or break decision as far as investing in Mindtree goes? The last 1 month, it's given a return of close to 10%.
See, I think Agam gave a fantastic overview regarding the results, and my case is that this is a company in transition. We've known for the fact that it has change of promoters, and now it's rebranded as a more like an L&T group company, and the top management is talking with a lot of its customers, talking about the fact that now it's an L&T based company, and they certainly have a track record in the IT services and the digital segment of IT business via L&T Infotech and L&T Technologies. So I think yes, there was a margin miss. The street was expecting somewhere around 9.8%. It has come to 9.2%. And Neeraj, this is a company which I think is not cheap in terms of valuations. It's quoting at 15 times FY21. So I really doubt that these results could bring in any sort of cheer, despite the fact on face of it, the constant currency looks decent, but I think the markets will still wait for better execution, and the revenue productivity which was talked about was very poor. The management is very confident and upbeat that H2 will be better in terms of margin going up, and also they are very confident about the deal pipeline. In fact, for automation, they've had almost 700 bots working on the digital segment, which is always a good thing to enhance productivity. But I think, Neeraj, the markets will wait for these numbers to come out, the margin execution to improve, till it tends to re-rate this company. No doubt, I'm very comfortable that a management like L&T is at the helm, and they have great long-term track record, but I would not chase to buy Mindtree at these levels, at around 650, 660, when the valuations are more close to like 12 times, 13 times. With such EBIT margin levels, I think that's a better and a fair price to pay. So I would wait for a correction before thinking of buying in Mindtree at this juncture.
Okay. Parthiv, stay on. So much more to talk about fundamentally. There are a clutch of other numbers we want to discuss with you about. But time now to get in our technical experts on board, derivative experts on board, to try and figure out what to do with the near-term trade. Abhijit Phatak, Director at Definedge Solutions, to kickstart that. Abhijit, good having you as always. Thanks for joining in. How are you approaching trade today, Abhijit, on either of the two indices?
Good morning, Neeraj. On Nifty, I am seeing a resistance near 11,480, 11,500. So it will be a bit risky if it opens even with a slight gap up. So I would not advise any fresh longs. There is a support near 11,420 on the spot, and if maybe on dip that can be tried, a long trend can be tried there, but with a strict stop loss of 11,400, because if that goes, then the market might become weak for the short term.
Okay, so wait for the dip to happen and then initiate a long position. Abhijit doesn't seem to be bearish. Would the call be the same for the Bank Nifty as well, Abhijit, then?
Bank Nifty is even quite strange. I mean, for the last 5-6 days, it is completely within a range, and unless it breaks out about 29,100, it might remain in the range. So again, the short on rise and buy on dips for Bank Nifty as well.
Okay, so short on a rise and a buy on a dip. So I'm guessing range-bound activity is what Abhijit Phatak believes these two indices could do. So in light of this, Abhijit, if this is your index view, which is almost like we don't know which way the index could go in the near term and maybe a chances of a dip, what are the specific stocks that you're recommending? I see you have a buy and a sell call. You're kind of hedging your bets.
Yeah, exactly. If the direction of the index is not sure, it's better to have both longs as well as shorts. So I'm looking for long in IGL, which is looking quite bullish, and with a stop loss of 365, it can go towards 390 or even 405. And HUL showed some exhaustion intraday yesterday, though there was a small spike at the end. But if it doesn't cross the 1680, I'm expecting HUL to come back towards at least 30-40 rupees down, maybe intraday or a couple of days.
Abhijit, just a follow-up, is IGL a very bottom-up or a stock-specific chart, or does the entire gas space look good? Because the last few days, a lot of these gas companies, Adani Gas, for example, was doing very well. A couple of others had chipped in as well. Do you like anything else too, or is it only IGL?
Yeah, even, both are looking good. Even MGL is looking good in that space.
Yeah, so, well, IGL is the call that Abhijit is giving, but MGL too is not looking all that bad. And frankly, if you look at the last 1 month, even Adani Gas, because of the deal that happened, has done really well, about 6 or 7%, mainly in the last few days post the deal. But also keep in mind, fundamentally, Adani Gas on a valuation basis, a lot more expensive than the peers. So you got to keep that at the back of your mind. Okay, stay on, Abhijit. It's 8:50, time of the show when we get you our special segment Bloomberg Edge, where Yash Upadhyay joins in to tell us about a pattern that the Bloomberg terminal is throwing up on a stock. Good morning, Yash. What's the stock on your radar today?
Morning, Neeraj. So we are discussing Lupin in Bloomberg Edge today, and the proprietary Bloomberg indicator, which is the trender indicator, that has given a buy call on the stock. Now, as we always do, let's first try and understand what the trender indicator is and how do you interpret it. So the trender basically uses the average true range for the purpose of calculation, and it helps generate a buy or a sell signal, and also helps you manage your stop loss. How do you interpret it? You go long when the trender line changes its color from red to green, and you go short when the trender color changes from green to red. When does this color change happen? When the stock price manages to close above the mark of the trender line. Now, in the case of Lupin, we've seen that the stock has managed to post its longest ever winning streak in at least over a year. It has been gaining for the last 6 consecutive trading sessions and has managed to buck the trend with respect to rest of the other pharma companies which have been under the weather because of the regulatory action. And with that, the trender line, which is placed at about 725, has been taken out on the upside, and with that the trender line too has flipped its color from red to green. Also, an interesting thing to note on the daily time frame is the fact that the MACD indicator too has given a positive crossover. So the MACD indicator, that is in the lowest panel over here, that has crossed above the signal line, and most importantly, this has also happened in conjunction with the fact that the RSI too has given a positive divergence, and it is now above the mark of 50. So an MACD positive crossover, the RSI above 50, the trender too giving a positive indication. All of this makes the setup look extremely positive for Lupin.
Well, normally we don't see pharma companies come on the radar of late. Yash, how well has this indicator worked for Lupin in the past?
So because the kind of move that we've seen over the last 6 trading sessions, Neeraj, so the upside is limited. So 3 out of the last 6 times that the indicator has given a positive call, the stock has managed to run up close to around 5.5 or 6% in fact over the next 1 month period. Probably a buy on dips kind of a strategy would be the best advisable, is what most of the technical analysts I speak to also suggest.
Okay, we'll watch out for Lupin as well. Thanks a lot for that, Yash. Abhijit, I just want a small clarification. What's the stop loss that you're putting on your Hindustan Unilever trade? The current price is, on the spot at least, is at 2071.
Yeah, 2090 is the stop loss. I made a mistake. 2090 and that is the stop loss.
Okay, so the stop loss is 2090 and I reckon the target is 2040 and 2020.
Yeah, about 30-40 rupees lower than, so about 2040, 2020.
2040 and 2020 are the targets for HUL, so do watch out for this stock as well. In the session, intraday weakness yesterday. Let's see if that lasts. Okay, a few other stocks that you should monitor fundamentally. We've spoken about what insurance companies are likely to do and thereof. Parthiv, the Q2 business update from PNB Housing Finance shows that the woes are not out. There's some positives. You could argue that asset quality is stable, etc., but disbursements are just not returning.
See, absolutely, Neeraj, and this is a market which is extremely wary of any housing finance company where share of LAPs and developer loans being on the higher side is not treated well, and I think a lot of eyebrows are raised in terms of how PNB Housing Finance's share price has moved, and it has been in a continuous downward spiral. And I think this is a question that a lot of people used to ask, I think in the last 3 years, that I think most of the real estate developers in terms of residential segment, they are talking about slowdown, they're talking about not many houses being sold. Yet I think some of these housing finance companies were growing their balance sheets by 20-25%, and the reason was certainly these developer loans and labs that they used to lash out. So I think there was a disconnect between the growth of the so-called housing finance companies and the growth in the ground level reality of these real estate developers. And now I think these ghosts of the past are coming to haunt these names, and that's a key reason why a name like HDFC Limited does not derate the way these guys derate Indiabulls Housings of the world or PNB Housings of the world. I think that's the key differentiating factor, and not that the HDFC Limited does not have these developer and lab loans, but their underwriting skills are amazing. And I'm little surprised in terms of the resilience of the asset quality that PNB Housing Finance has so far shown. So market is certainly wary that this might not sustain, and with the lowering of disbursement, they're certainly worried about their current asset quality, and they might really want to slow down and try to clean up, and that's what they're trying to do with increasing the securitization. But again, with the DHFL securitization getting a downgrade, which is a very rare phenomena, this is a market which is not going to trust such HFCs. So I think better to stay away from these names.
Actually, one of the NBFCs which rose in trade yesterday, Parthiv, and I hear from a lot of dealing room sources about there being some stronger hands trying to come in, and that is Edelweiss. Now, there is fundamental news out there as well, because I think the Competition Commission of India has approved an investment from Cora Master for up to 10% stake in Edelweiss Securities for 75 million. Now, they have, in a piecemeal basis, sold off some of the assets in order to raise liquidity. At this price, does it give you the confidence that the pain may already be in the worst case scenario, or is it unpredictable?
I agree with you, Neeraj, that very smartly at different junctures they have been successfully been able to get some foreign capital. Last time I remember it was the Canadian pension who had inserted around 2,000 crores, and now again in their Edelweiss security business they have garnered $75 million. Does show, I think, the management credibility is still trusted by a lot of foreign players. But again, Neeraj, a very, very difficult scenario wherein I think in terms of their overall book, it's not like a only real estate lending company like many other places. It still has this 24-25% loans given to the real estate sector. And unless and until I think this particular sector shows sign of massive turnaround, I think markets are not going to trust any sort of positive development in these names. So I think it's a very difficult call. But at this juncture, my bias is more towards more stable and resilient names, which are also going to grow maybe at a faster pace than Edelweisses of the world, which is names like HDFC HDFC Limited. They're going to raise a lot of capital. They're going to garner a lot of market share and good quality market share. And they're going to even be more strict in terms of their underwriting skills and disburse loans, which for long term are going to give them very good yields and without any problems with the asset quality deteriorating. So I think in such a scenario, why not go with a name like HDFC Limited, then even try and chip into these names, try to bottom fish.
Well, yeah, maybe there's merit there. Just the point that somehow people find it a bit difficult to go out and make large fresh bets onto some of the expensive names. But yeah, Abhijit, we haven't discussed the charts of some of the financials. Any of these that you track? Bajaj Finance yesterday bounced back quite smartly if you track that one, or Edelweiss, which has bounced out from some multi-month lows or thereabouts, was up about 7 or 8% in trade yesterday, or PNB Housing Finance, which cracked 12% yesterday. Do you track any of these three names?
Yeah, I track Bajaj Finance quite closely, and it appeared weak earlier, and I'm not very bullish on it right now unless it crosses 4100, 42, 4150, and it might, if it doesn't cross that, it might come down also. So I'm looking at 4100, 4150 to see any strength in that stock.
Okay, so you believe that even though there's an upside, there might be a point of resistance at those levels, Abhijit, right?
Yes, near 4100.
But you wouldn't go out and make a short call out there. You would take it as it comes.
Maybe intraday, if I see a weakness near 40, I mean yesterday's high or near 4100, and it shows weakness intraday, there might be a good shot in it.
Okay. Okay. And any, maybe I've asked this to you earlier, Abhijit, but very quickly, any life insurance company which is on your radar? All these stocks were active yesterday.
No, I don't track any of them because they have, I mean, quite overbought. So buying them at this stage might be a bit risky. So I would not, would like to stay away from them.
Okay. So from a trading perspective, Abhijit Phatak doesn't quite like them, but and fair call, to each their own, of course. Just that fundamentally, almost nobody seems to dislike these companies. Let's wait and watch what happens there. Anyways, 24 seconds left for the markets to kickstart trade. Give you a quick setup of what we are in for in the session today. The Asian markets. Flattish, you would see that all green, but Hang Seng too has come off a little bit, and it's a very volatile index, so don't pay heed. But almost all the other Asian indices are flattish in the session. The SGX Nifty extremely flat indicators, so maybe we'll start off very, very flattish in the session today. And then let's wait and watch what happens to individual stocks during the course of the morning. But here are the first rates as they come up on the screen. The Nifty and the Sensex, flat moves, no big gyrations. Let's wait and watch if things change in the first 8 minutes of trade. Start off with maybe BPCL, the big mover in trade yesterday, and let's see what that is doing in the session today after the 5% uptake. Does it have some other moves? Well, unchanged for now. Maybe the banking names, Bajaj Finance, HDFC Bank, HDFC, all three which were active in trade yesterday. Bajaj Finance, big contributor yesterday, but currently starting off flat. HDFC, flattish. HDFC Bank, likely be flat. I don't think that if the indices are not moving too much, these things will move too much. Metals, and let's see if Hindalco and some of the others, because of Alcoa's declaration, are reacting. No, not quite. So it's a flattish start for most of the benchmark names. Let's wait and watch if something else happens. Result reactions, if any, to 2 or 3 names. Maybe Mindtree and Hathway should come up on your screen. Mid-size names, but maybe we're seeing a reaction already. Well, Mindtree marginally higher. Hathway, strong numbers. Looks like starting off was up 5% in trade yesterday as well. PNB Housing Finance, maybe that is reacting to its Q2 update after the 12% downtick for now, no. And then watch out, of course, for all the life insurance companies, HDFC Life, SBI Life, ICICI Pru. We'll watch out for each of these as well. Let's give these rates a chance to stabilize, and then we'll talk more about them. The currency, the dollar index had corrected yesterday. Let's see if the rupee opens marginally stronger or no. Oh, marginal at that, 71.39. Better than the open yesterday, but just about flattish in the session. Okay, before we move any further with our guest, let's get in Sameet Sarkar, who joins us with the top brokerage calls for the morning. Sameet, good morning yet again.
Good morning, Neeraj. I'll start off with UBS on Eicher Motors, where the brokerage has upgraded its rating on the stock to buy from and sell, and has hiked the target price to 23,000 from 18,000 rupees. Now, the rating and downgrade cycle has come to an end for the company, says the brokerage, and the outlook is improving according to the brokerage. And they're expecting the product cycle to turn with BS6 implementation. Now, they're expecting that the volume growth would recover in financial year 2021 with major product refresh, and they're also saying that that the margin concerns for Eicher Motors are overdone and the declining commodity prices will support the margins in the second half of financial year 2020 and in financial year 2021. The second one is on Bandhan Bank, where Macquarie has maintained its underperform rating on the stock with a target price of 425. Now, there is a material bump up in ticket sizes in some geographies, which is an area of concern, says the brokerage. And it also says that the microfinance demand has not been impacted by an economic slowdown, and there has been a bump up in the ticket sizes. Now, for West Bengal, they are saying that West Bengal has nearly 25% higher average exposure per client than the Indian average, which means that it is clearly over-levered, and this is not a good sign for Bandhan Bank. Now, they're also saying that markets are currently not factoring in the difference in states' economic profiles given the upsize in the ticket sizes that has been happening. And lastly, it also says that at the current valuation levels of Bandhan Bank, there is no margin of safety, and that's the reason they have maintained the underperform rating with a target price of 425 on Bandhan Bank.
Okay, we'll watch out for these names. Thanks a lot for that, Sameet. So do watch out for some of these stocks. Actually, that's the other important one, Bandhan Bank. Such a terrific mover for all the days preceding yesterday, when there was a buying on the back of the MSCI inclusion in yesterday. Post the news, the stock correcting a bit. 7-day move about 20%. Yesterday's session came off a little bit in trade. Sameet Chavan, Chief Technical and Derivative Analyst at Angel Broking, with us on the show. Sameet, good morning. Since you're on the topic of Bandhan Bank, do you want to dwell on this a bit? It's been a very interesting mover, both Bandhan and Groww Finance naturally so. How do the charts look now?
Morning, Neeraj. See, as far as Bandhan Bank is concerned, the low-hanging fruit is already gone. There was a good buy somewhere around for 500, 510. Obviously, around 470, 480, the stock was in the process of forming some kind of base. But after that, after confirming that's a breakout around 485, 490. So 500, 510 would have been a good buy considering the risk-reward ratio also. But now at current level, after such a strong rally, it becomes very difficult to trade this stock, and this has become a news-driven stock as well. But having said that, as long as it is maintaining its position beyond 560, there's no reason to worry for. But once the stock slides below 560, then we can see that the breakout which has happened a couple of days back, it was clearly a false signal. So one should remain positive as long as the stock is holding 560.
Okay. So Sameet, what's your index view, and in light of that view, what are the stocks that you're recommending in the session today?
See, clearly the bias has been positive since last 1.5 months, and we would continue with that. And last Thursday also when we meet, we were somewhere around 11,200. From there, we have seen a gradual move towards 11,500 now. So it's a matter of time we would see Nifty surpassing this level. But the challenging task would be somewhere around 11,600, where we can see multiple resistance coinciding. There's a key downward sloping trend line that is converging around 11,600. So that's the level to watch out for. So if we have to take any bet, we would remain on the positive side, and we would hope that this 11,600 would get surpassed soon, and we would head higher from those levels. The only pain would be banking index. So banking index needs to give some kind of strength. It has to surpass its resistance of 29,000. So as long as today's strategy is concerned for the index, we would remain positive. But Nifty has stuck in a range 11,500, 11,400. So one should buy as close as possible to the support level. So any dip probably toward 11,400 would be a good buying opportunity. And once we see Nifty surpassing 11,500, we could see a good move towards that important level of 11,600. Individual stocks, yes, the inclination remains on the positive side. Godrej consumer product, which has been bucking the trend since last few days, it has been showing strength, and after a consolidation of nearly a couple of weeks, yesterday we saw a decisive breakout happening in this counter. So we would remain a bit on this stock. 733 to 750 would be our near-term targets, can be bought with a stop loss of 691. And apart from this, we have a contra buy on Tata Motors, which is attempting to give some kind of breakout from its resistance of 130, 131. So we are anticipating that to happen. One can go long. Target would be around 136, stop loss at 121.
Okay, so do watch out. Tata Motors also, interestingly, the last 2 or 3 days has had some interesting moves. As the pre-open rates are settling down, I'm trying to look at companies which are showing some large moves. There is a small cap stock called Crest Ventures. If we can pull that stock up, it's showing some 10% uptick. Don't quite know why, but dramatic, but it is showing some gyrations, 10% uptick, as I said, in the session. On the Nifty 500, some of the other names which are correcting, by the way, include Diwan Housing and Lakshmi Vilas Bank, as also Indiabulls Real Estate and Indiabulls Ventures. So those stocks continue to grind lower. Indiabulls Housing at 168 is down about 2.5. What is doing reasonably okay is Hathway Cable, PNB Housing Finance, surprise, surprise, in the green. And I want to take a look at ICICI Lombard too, because yesterday, as I said, that was the only one which was the odd one out. In today's session, marginally higher in trade, nothing too dramatic. Okay, Parthiv, I think some data suggested that the 25-year bond or the 10-year bond of Vodafone Idea was trading dramatically lower than the issue price. So the YTDs or the yields have dramatically moved up. Maybe the market is nervous or otherwise. My question, though, is fundamentally, with the first signs of some change coming in, would you be a buyer at the current prices into a Bharti Airtel? And if you are a high-risk investor, would you even consider Vodafone Idea?
I think in the telecom space, we have been talking about Bharti Airtel even during the stressful times when it was quoting at levels of 290, 310, 330. And the simple reason being, in terms of all parameters, in terms of trying to be a resilient company versus mites of Reliance Jio, I think the relative attrition rate in terms of the subscribers was a lot lower. The bigger degradation in terms of ARPU was a lot lower as compared to Vodafone Idea. The integration challenges were not there which Vodafone Idea had, because Vodafone Idea, two companies itself had to kind of integrate almost and still have to integrate 60 to 70,000 cell sites, which was causing a lot of network quality issues. And I now have some very, very loyal customers who are preferring to now move out because of the bad quality coverage. So I think that's the pocket where, I think there's a lot of unhappiness in terms of the customer satisfaction, which Bharti Airtel never had. And now I think Bharti Airtel is going to get this advantage of Reliance Jio now starting to charge even at a low rate of 6 paisa per minute, which is certainly going to be very, very beneficial for likes of Bharti Airtel. And this also comes at a point in time where Bharti Airtel has very credibly and at a decent level raised a lot of funds, and even their African operations, they have always a good chance of monetizing that. So in terms of balance sheet strength, in terms of coming back, in terms of their growth trajectory and better ARPUs and focusing on high paying customers, Bharti Airtel still is extremely well placed as compared to Vodafone Idea. And unfortunately in Vodafone Idea's case, I think they will still have to dilute a lot of equity, they'll still have to raise a lot of funds, they're burning a lot of cash quarter on quarter. So unless until that trajectory improves, and with all the calculations of better ARPUs after the Reliance Jio charging the IUC, what will happen is that Vodafone will still improve their EBITDA by 20-25%. Yet that's not enough to kind of satisfy the interest charges that they have to pay. So I think it's going to be a very difficult journey, and both the companies probably will have to pump in more capital, and raising capital from the public markets is going to be now very, very difficult for them.
Okay, we are minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Zee Entertainment is likely to report a 24% profit growth this time around. However, lower ad rates may impact operational performance. Alcoa has cut its full-year global aluminum demand forecast. It is expecting demand to degrow compared to a positive growth earlier. Mindtree's second quarter results met estimates. Operating margins expanded while revenue productivity saw a sharp fall. Hathway Cable and Datacom's operating profit doubled, aided by strong revenue growth. Net loss narrowed due to high other income and forex loss in base quarter. Fairfax Holdings sold its complete stake in ICICI Lombard via a block deal. And Macquarie expects Bandhan Bank to underperform, says rise in ticket sizes in some geographies is a concern. Well, very quickly, a pocket that did very well. Parthiv, before we thank you, a pocket that did very well or has done well in this quarter are these, the cable companies, Hathway, GTPL, Hathway. The numbers aren't looking all that bad. What's happening here?
See, I think in case of pockets like Hathway and Den, we know now they are basically Reliance Jio companies. So definitely a lot of cost cutting and efficiency is going to get kicked up. And the banks are going to behave extremely well in terms of how they disburse the working capital loans now because the parent is so strong. But very frankly speaking, not getting very carried away, Neeraj, with the recent decent performance in terms of their quarterly numbers. Because especially with these two names, Hathway and Den, eventually we know they're going to get integrated into the main company. And generally the parent tends to benefit whenever there's any sort of such integration. So I think it's no great idea to kind of bet into these names just because of a couple of quarters of good performance. I think this is an industry where a lot of disruption is taking place, and I think likes of Reliance Jio, which is playing very smartly by having the last mile connectivity and also having a lot of data with them, I think are certainly going to benefit in the long run.
Okay. Parthiv, stay on. We'll take in your top idea, top investable idea in a bit. But as the pre-open rates have settled down, we see some negative movement in the commodity names. The Hindalco, Vedantas and the JSW Steels of the world are likely to start off slightly lower. TCS might be the top loser, by the way. And what could be doing well today? Names like Tata Motors, Eicher Motors and some others. Tata Motors, incidentally, is a top call from Sameet, Chavan. Abhijit, Phatak, can I ask you about Eicher Motors? That had a decent outing yesterday. There's a brokerage upgrade today. The stock is likely to start off 1.5% higher. Can it do more?
Sorry, which one? Eicher?
Eicher Motors.
Yeah, but there is a resistance near 19,400. So if that is crossed, then this can be quite a good long today also. Only thing is a lot of stocks, the reason I'm a bit cautious is a lot of stocks which have made a high after the 20th September big spike. In fact, Eicher Motors is very close to that. HUL is very close to that. So unless those highs are crossed, one needs to be cautious in those stocks.
Okay. Well, let's nail it down to that one top call from both our experts then. Sameet, Chavan, I'll come to you first. If you had to bet on one stock for the day today, which one would that be?
I'll go with steady mover Godrej Consumer. So one should go long, target 733, stop loss 691.
Okay. Abhijit, if you had to nail it down to one stock, which one would that be?
I'll go for HUL short near 2075.80 with a stop loss another 15 points higher for about 30-40 points lower intraday.
Very interesting, that consumer space, but one long and one short. Sameet, one very quick 15-second call on the Nifty Bank.
See, this is what I said. Bank Nifty has to surpass 28,900, 29,000. So this is a important level for Bank Nifty. If that is get broken, then we could see sharp move in Bank Nifty towards 29,500, 29,800.
Okay, Jaman, stay on. We'll take in opening thoughts from you, and then thank you. The market's about to kick-start trade. We will have a start which is marginally in the green or flattish maybe, and then let's see how we shape up from there. Yes, it's a very flat start. The Nifty is not moved, just about 6 points in the red now, but bobbing between the red and the green. Similarly for the Sensex, just about 29 odd points, so hardly any move. And the Bank Nifty too flat, absolutely flat, 0.08%. So viewers, no movement in the indices, flattish start on expected lines. I think the mid caps and the small caps will also be doing the same, so we won't have big gyrations out there. Extremely flat start. Let's quickly get to the heat map. There's nothing happening in the indices. Maybe individual stocks are showing some signs of movement. Market breadth almost even. Stevens a bit more red than green, but nothing to worry about. What is doing well? Eicher Motors up 1.5%. Z Entertainment up 1.5% ahead of its numbers. Yes Bank marginally higher. Bajaj Finserv and Titan are amongst the others. Bajaj Finance continues from where it left off, so about 1/3% higher too. But no dramatic moves. Probably Eicher and Z are the only ones which have some gains. What is losing out? Hindalco on obvious reasons. Alcoa cutting down its forecast would have an impact on Hindalco sentimentally or otherwise. TCS is correcting today, down about 2%. We have Vedanta and Tata Steel following suit. ONGC is down. JSW Steel is down. Bharti Airtel corrects another 0.8%. So there's some pain in Bharti Airtel the last few days. We'll do what 3 days after that big up move. The stock has cooled off. But otherwise, it's a very flattish start. Hindalco the top loser along with TCS, Eicher and Z the top gainers. What about individual pockets of strength, some stocks which have come out with news and results, and let's line up those 3 or 4 mid-cap names to try and figure out what should one be watching out for. So firstly, the life insurance plays, and after that big move in trade yesterday, these stocks start off slightly flattish, except SBI Life, which showed some glimpse of strength in its results, and it's doing rather well for itself. So up about 2.5% is SBI Life in the session today. Let's move on. Some other companies in focus and in news. So firstly, the results impact. Mindtree down about 2.5% in the session, and Hathway Cable showing a reaction of about 4.5 to 5 odd, actually 5 odd percent, locked on an upper circuit, very similar to the up move that we saw in the stock in yesterday's session. Then weak results for not results really, but the Q2 update was weak for PNB Housing Finance, but after the 12.5% slam dunk, is just trying to recover a little bit, a couple of percentage points in the green for PNB Housing Finance. Nothing too dramatic, but up in the green nevertheless, so do watch out for this one. And then some stocks which should be in focus today. Edelweiss, because they've got the permission for some further fund infusion in the securities business by a global player, and Nalco, which is clearly facing some issues on the smelter side, and that stock is starting off about 3.5% lower. So net, these are the key names that you should be watching out for in the session today, but very flat start for the benchmark indices. Let's ask the final set of questions to our experts. Sameet, Chavan, to you first. First couple of minutes of trade. Anything that is popping up on your screen?
See, there are a lot of stocks, that are showing good buying interest at lower levels. So we would remain a bit, and auto stocks, which has been buzzing since last couple of weeks, they are attracting good buying interest at low levels. So Escorts, Bharat 4, these are the stocks we would be closely tracking along with Tata Motors. So one should focus on auto stocks as well.
Okay, so do watch out for some of the auto stocks, and Parthiv has already made it, Sameet has already mentioned that Tata Motors is his clear favorite. Abhijit, Phatak, early in the day, but first 3 minutes, anything that you are observing?
Yeah, in fact, HUL, which I suggested, it did not cross that spike high which happened in the last half an hour yesterday. So that is looking weak to me intraday. So any rise will be a short with a high stop loss about 2080.
Okay, so those are the two names that you should, auto stocks as well as HUL individually, which is Abhijit Phatak's top call to be watched out for. Gentlemen, Sameet and Abhijit, thank you so much for taking the time out and being with us. Eicher Motors got that big upgrade, and that is now comfortably above that 19,400 mark that Abhijit Phatak was saying, 19,802. Great franchise, Parthiv going through intermittent issues, now starting to come back a bit. Do you like Eicher Motors as a stock?
Yes, I think, Neeraj, last time when we discussed about this stock at levels of 16,500, we had suggested that it can become a good SIP kind of a stock. The reason being that it still has a very good pipeline going ahead. And no doubt, I think we know for the fact that they've seen massive sales degrowth in their core business, which is Royal Enfield. I'm still not even talking about the Volvo JV in terms of the commercial vehicle. That's still going to take time to ramp up. But we know bulk of the profitability and the margins come from the Royal Enfield space. And they certainly have a very niche pipeline. And from this current base of selling somewhere around 55,000 bikes a month, we are very confident that from this base going ahead, I think the demand will reinstate. And also more importantly, with the new launches, I think we'll see, decent volume growth. And I think this is a company which has a rock solid balance sheet. They've innovated extremely well. And from these valuations and these levels, I don't see much downside. And if one were to give it to a 2 to 3 year time horizon, certainly I think there's a lot of appetite for this segment of 250, 350cc bikes to grow in India.
Okay, so watch out for Eicher Motors. And Sameet, Parthiv, before we thank you, one investment idea from your end. We talk every Thursday, but I wonder if something's developed in the last 7 days that has caught your attention and you are willing to take a look at that stock.
Sure, Neeraj. I think so. This is a type of market where we are trying to find ideas where there is growth visibility, and yet current multiples are not very high. And Heikel is a stock where I think both these criteria are satisfied. See, I think we know for the fact it's an old company. It's more of the management quality in terms of Hiramat and the Kalyani group at the helm. And I think this is a company which has focused on very niche segment, like in specialty API. They have already developed through an enzymatic process. At the risk of using jargons, I think a product for CNS segment, which is a niche segment, and this can really scale up and give them very good margins. Very similarly, even in the crop protection business, they're working with some Japanese innovators to develop, I think, very rich intermediates, which can again give them very high margins. Not forgetting the fact that last 5 years they've done a capex of 500 crores, and going ahead over the next 2 years, they're still going to enhance their capex by another 350 crores, and that capex is primarily going to be for more of backward integration, because this is a company which imports 35% of its raw materials from China, where a lot of volatility had taken place. So now they're going backward integrated, which will help them in terms of sustainability of margins. And despite this raw material up and down, I think they've still sustained their margins at 20%. So we are expecting over the next 2 to 3 years this company to grow their top line by anywhere between 18 to 20%. And I think even with margins at 20%, if we pencil down the numbers, the forward valuations are extremely compelling for such niche plays. So I think both the crop protection and the pharmaceutical API business, we are very upbeat on it, and they are constantly innovating. And over the next 2 to 3 years, more innovative products are there in the pipeline, which can enhance their revenue and margin profitability. So overall, I think we are very bullish on Hycal at current levels.
Okay, Parthiv, thanks as always for joining in today and giving us your thoughts on a variety of things and an investment idea as well. Thanks for joining in today. Just want to mark Vodafone Idea. Remember, we spoke about it in the morning that the bond has come off and was trading at a substantial discount to the actual face value. And well, Vodafone Idea as a stock is correcting. I wonder if Bharti is doing the same. I doubt really that there will be such a dramatic reaction. Vodafone Idea has issues of its own. Bharti is down 1.5% too, but Vodafone is down for specific reasons. So company-specific reasons is what I'm saying. Let's wait and watch if this improves. But yep, issues out here for sure. Anyways, so that's with regards to some movers and shakers in trade. Let's welcome special market voice, Vikas Khemani, founder at Carnelian Capital Advisors, joins us right now on the show. Vikas, so good having you. Thanks much for taking the time out. We've had a bit of a rally from the last time that we spoke until now, Vikas, at 11,500 odd. The earnings season has had a bit of a mixed bag start, though I don't think too many people anticipate fireworks. What's your thesis now? Are you lock, stock, barrel, full cash deployed buyer, or are you keeping some gunpowder dry currently?
Hi Neeraj, good to be on the show. I think definitely, as we discussed like last time, the continuity to that is market or economy is on a repair, on a mend. I think whatever initiatives government has taken after 5% GDP print are all in right direction. Of course, when you have this kind of mammoth sort of economy to handle and move and come out of a slumber, I think it takes time. So I think in my opinion things are pointing in the right direction. We have interest rates coming down, we have inflation fairly contained, we have had government measure to kind of push through sort of boost demand, and we have festive seasons sort of right now helping that in that sense. Also, I think a lot of supply side measures have been taken in terms of getting the credit supply into the economy, though it is still not enough, but I think to my mind that is the biggest single variable at least we are looking and we are watching. So I think slowly things are moving in the right direction, and that's the reason market is presenting, in my opinion, a very good opportunity to invest. So we are continuing to invest. We are pretty much sort of there. As we are getting more money, we are investing, but we think that this is the best time to kind of keep nibbling, keep buying, and keep committing. Because this next year down the line, probably from now to next Diwali, you will find a very different market sentiment. Different. Today you are in a probably somewhat very mixed kind of sentiment coming out of a very bad market cycle. But I think from now to next 1 year, you will see a slow and steady repair in the economy and change in the market sentiment.
Okay. So, Vikas, how do you then play that? I mean, there are 2 or 3 schools of thought out here. I was wondering what you favor. The obvious school of thought has been just buy the favorites and stick to them. I think now I hear a lot of people saying that since the first stage of the upmove has been done, go out and buy the number 2 or the number 3 valuation player, which is stable because it will play catch up in terms of valuation to the peak valuation that is enjoyed by the sector leader. Would you try and do that in some of the sectors which are still on the forefront, but trying to find the underperformers within that sector?
So I mean, I would not say that, look at particularly a second and third run counter. I think three things. I think one, I think we have to believe, for taking any conviction, high conviction call, you have to believe that India's story is here to stay. India's story is robust. It had its own problems, but it will get repaired on its way. And once you have that, then you will start, because without having that hypothesis, conviction in the India story or conviction in that verses behind, unless you have that hypothesis, you won't be able to move beyond a super, expensive quality what we have seen, which has been favored by the market. So if you have that conviction, then you can kind of go and look out, spaces. In consumption space, we have had significant correction in many of the consumer discretionary. I mean, they are very, very attractive play. In financial, still we have reasonably large amount of ideas available in terms of in private sector bank, in non-credit oriented organization. So I think
I think
overall, I think financial and consumption space.
Yeah, I know, because you're coming, I just thought I'll just sum up your view. I think trying to look at financials individually. Okay, but Vikas, just if you want to follow up your point, I mean, you're talking about the lending financials. Do you have any thoughts on the non-lending financials? Because that's the other bucket where the market seems to be finding some comfort.
Absolutely, and that's a very, very good opportunity. Excuse me.
Yeah, okay, let's come back to Vikas. Let me just quickly tell you what the markets are doing, and then we'll resume our conversation with him, because as I think a lot of people have been pointing out, that while we are all besotted with what's happening to NBFCs and the lending financials, which are not doing well, maybe some people have missed the bus in the non-lending financials though. And everybody who stayed invested in the AMCs or the insurance companies have, of course, enjoyed the benefits. Well, maybe the rally is done. So the question mark only would be that now, does the market continue to favor the non-lending financials? And would the valuations continue to move sky high? Because it's a bit of a quandary, isn't it? Some people have missed the bus. The ones who are in the bus are now thinking about whether the valuations are so stretched that they should book some profits in the non-lending financials. Insurance, AMCs, what have you, everything is trading at peak valuations.
No, absolutely, and I think there's no denial on that the valuations are fairly high in most of these names, and hence you have to be very sort of careful. From long-term perspective, they will definitely deliver value, and that is where I think most of the investors are right now in sort of dilemma, that should you look at if you have to take 1 year perspective, should you stay away from them? Because I think from 5 year perspective they might outperform, but for 1 year they might kind of underperform. So it really depends on the objective of the investments, investor, that how they want to look at it. But right now, at least from our perspective, we are finding a lot of ideas, in mid cap to small cap space, even in larger cap space, where you can find reasonably good value, which can kind of deliver over next 3 to 5 years 18-20% return. And within non-credit financial space also, by the way, you got to look at beyond 2-3 names which are very expensive. Still you can find interesting plays which are not as expensive as they are. So I think you have to look at stock specific rather than talking a particular basket, because yes, every basket looks good, but I think within that you have to go and deep dive management, business model and stocks, and then only you can kind of arrive at.
Okay, because having spoken to you for so many years, I remember in this in the earlier meltdown that had happened, and when people didn't want to buy anything, you had looked at some high quality companies, great bottom up ideas, and identified them way early in the cycle. Are there such opportunities available currently wherein companies might be very early in the cycle? You might have to hold them for slightly longer before they start making the move, but the business opportunity and the runway is very, very, very long. Anything like that you are researching?
Yes, I think so. One very big structural theme which we are very positive on, which we think that over next 8-10 years offers a very good opportunity, and we are in some sense minority in believing in that theme. We think post implementation of RERA, real estate developers is a very, very good interesting opportunity. Now obviously you cannot remove everybody, paint with everybody the same brush. So there are good developers, there are sort of not so good developers. So after the RERA implementation, the game has moved in favor of large organized players with good balance sheet, good brand, good governance structure, instead of earlier anybody could become builder and raise capital and raise money from the clients and sort of put up a project. That is now kind of changing. So in my opinion, it has moved. It's a very, very big shift will happen. It is pretty much similar to what had happened in capital markets post formation of SEBI. Today, I think if you look at 20 years down the line, capital markets are very robust sort of sector, which was not there in 95 as we were, 94, 95 period. So I feel real estate is a very, very big sector. It is a need of the economy. Every economy will need it, and it is need for like next 10, 15, 20 years will always remain a very big sector. So this shift will create a very large opportunity in organized good real estate players, and we have taken a call from an 8-10 years perspective that here you will find many ideas which can become 8-10x, 15x from here. Structurally, you have to do a lot of work in terms of name of the companies, what is their balance sheet look like, what is their projects look like, and you have to do a lot of diligence given whatever the baggage of the sector. But we think this is a very, very promising play from long-term perspective.
And just because one follow-up, because it's a sector that has not created wealth thus far, what percentage of your portfolio are you willing to have a real estate allocation of? Would it be sub 5%, or are you willing to bet big on this?
So we are right now, playing around close to 10% of that portfolio in this segment. Because having said that, you have to also see we have made a theme. Conviction is there, but you have to also see, wait and watch, identify companies, and there will be new companies which will come into the sector. So, but the point is that our broader theme is in place, and we will keep watching. We will keep allocating more and more capital as things develop in the sector. But currently we are, I think, our all exposure between 5 to 10%. I think closer to 10% rather.
Closer to 10%, and well, Vikas Khemani is putting his money where his mouth is. He believes that this is that one big theme to watch out for. Vikas, so good having you. Thanks so much for joining in. And if we don't meet before the festive season, festive greetings to you and everybody at Carnelian.
Thank you very much, Neeraj, and wish you and viewers a great festive season.
Thank you so much. Well, maybe real estate does that for viewers. Next season, they might have a good festive time as well, if Vikas is to be believed. Let's wait and watch if that happens. For now, the market's absolutely flat, so nothing much. But remember, today, as much as we've spoken about real estate and insurance, we've spoken about infrastructure. And it's important because there is lots happening within that space. Vishal Kotecha of India Ratings has written this very nice report, and he joins in to tell us why NHAI's new road project orders fell short of expectations and what could be done to try and improve that. Stay tuned.